All right, guys. So I just wanted to show you guys exactly how what I do before I look at the charts, okay? Because the charts, they're not my first step when it comes to investing in the CFD market. The chart is like the second thing I do, but the main thing I focus on before I even jump on the charts, I need to understand the fundamental and the macro direction of the market I want to trade. And because I trade a lot of dollar influence markets, I track the US economy, I track the US dollar with respect to macro and fundamental. And that is the main reason why I built this particular tool, which is the SOG Capital Macro Policy Tracker, built specifically for the US economy. It follows the Fed or it tracks the Fed, the jobs reports, the inflation reports, geopolitical. I have a geopolitical factor overlay over it. So at a quick glance, I understand where the DXY should be moving with respect to the macro and fundamental. When I understand the macro and fundamental direction, I now jump to the charts to clearly understand what is happening on the chart, if it's lined up with the macro or fundamental. You get it? Yes. So this is the SOG Capital Macro Tracker. You can find it on www.sogcap.com. You can find it over, well, it's not free because I can't make it free like that. This is it took me so many years to be able to understand exactly, the data that matters, from these countries. It took me so many years to know the exact data to track, you know. And so of course, but it's very cheap because I looked out there and there was nothing for retail CFD traders, that could help us understand macro. And I've just done it for the US dollar. This is just for the US dollar at the moment. Maybe in the future I would upgrade it to other currencies, but this is specifically just for the US dollar. So, when you visit the site, you can create your accounts and log in. You can get access to the blog. You can get access to um, quite a number of things. The blog is on there. The macro policy tracker is on there. On the blog, I write, really, really, really good articles from time to time. So you go read and understand macro and fundamental really, really well. Okay, so how this tracker works, quick one. Yeah, how to your 60-second guide before diving into the data. And everything I have here is in plain language, so it's not overwhelming. It's not going to confuse you as a newbie who has not read economics before. It's not going to confuse you, you understand? So every month, three major data releases shape the direction of markets and interest rates. The Fed meeting, which is the FOMC, the jobs reports, and the inflation report CPI. This tracker pulls them into a single connected narrative, so you never have to read three separate reports again. That was the main reason why I built it. I built this purposely for me, first of all. Then I realized, oh, this is actually good and it's helping me. That means it can help the next person out there. That is why I decided to commercialize it and put it out there for you guys to, because initially I was just doing it on my own on Excel. I used to pull the data on Excel, then do the grading on my own on Excel. But I realized, well, I could put it out there for people, for other retail traders to also get access to it. That is why I put it out there. Okay. So track the Fed, track the FOMC, NFP, CPI. There are other reports that we track, but because they all fall under, you know, inflation and all of that, we've just bundled them into the three main reports. All right. So on our inflation, we track the CPI, we track the PCE, which is mostly the Fed's gauge. All right. Uh-huh. And we track the jobs reports, we don't just look at the jobs added. We look at the unemployment rate, we look at the broad unemployment U6, we look at the adults working, and I've explained all of those things, beneath in plain language. One thing that this tracker will also help you achieve as a trader is it'll give you the understanding when it comes to macro and fundamentals. It'll help you understand exactly what macro and fundamentals is. You get some of the jargons and the terminologies will become more easier for you to grasp when you continue to look at it. Okay. This is the Fed terminal where I always break down after every FOMC release. I always do the breakdown. After every FOMC release, I do the breakdown. So you understand exactly what the Fed said during the FOMC. Yep. Quite a long read, but it's worth it. And this is the job sector breakdown. So I mostly break down the jobs report. I go in there, take out the data, break it down. So and I put a description in plain language so you kind of understand what is going on. And this is the PPI section. I track the PPI. PPI is it's a pipeline inflation indicator, so it has to be here. So I track the PPI as well. This is the Fed CME Watch tool. Okay. Yep. So is a free tool that shows you what professional traders in the futures markets are betting with will happen in the next Fed meeting. So this tool is so important. It helps me understand what, you know, the pro traders in the futures market are betting will potentially happen in the next FOMC meeting. So you can see that in the next FOMC meeting, as a one just coming up this particular week, you can see the high probability from these professional traders as they are thinking that the Federal Reserve might hike 35.8% of them are thinking that the Federal Reserve will hike rates. 64.2% are thinking that the Fed will hold rates and not hike, and 0% are also thinking that there will be a cut. So they are not looking for a cut at all, but they are looking for potential hold. Most of them are thinking the Fed will hold, while 35.8% of them are thinking there will be a rate hike. Okay. Yep. All right. So this is where the story connecting all the three, the Fed, the jobs reports, the inflation data, PPI, CPI, all the PC, all that. Now, this is the most important aspect of the whole. This is one of the most important aspects of the whole, what's the name, tracker. After all the data has been collected, has been pulled together and all of that, what does it mean for the dollar index? What does it mean for the DXY? Okay, so this is the most important aspect of the whole tracker. Okay, so where the dollar is likely headed and why. You can see the narrative here. The current macro setup leans dollar positive overall, though it is not a clean sweep across every driver. Inflation data has cooled. June CPI printed 3.5% year over year, down from 4.2%, with core flat at 0.0% month over month. The first zero core reading since January 2021. Additionally, the latest jobs report missed expectations. A genuine soft spot the Fed will be watching closely. Note large speculators remain at long the dollar and are actively adding to that exposure this week. The FOMC stance remains a primary bullish anchor. On balance, the data still points toward dollar strength, though the inflation and labor market signals have both softened this cycle, and the July 28th to 29th FOMC meeting is now genuinely data dependent. Geopolitical overlay, geopolitical risk, Middle East, Iran, and blah blah blah. So all of these, gives you get to understand from a macro and a fundamental perspective what is the dollar supposed to do. So if the dollar is bullish, then I'm looking at selling gold. I'm looking at selling Bitcoin. I'm looking at selling GBP USD. I'm looking at selling, AUD USD, Euro USD because the dollar is bullish. You understand? Yep. So it's by and large it's a very good tool that can help a lot of traders. This is the COT report. We track the COT report as well, so you can see all the things we track: Fed, Fed dot plot, labor market, inflation, PPIs, Fed CME, COT report, geopolitical risk, all these things we track them, right? All these things we track them. Yep. Yeah. Now, this is also another amazing aspect of the tool. Now, what to expect on 10 markets, 10 major markets this cycle, AI market outlook agent. So I can just hit generate outlook over here. And because the dollar macro is bullish, it'll tell you what to expect on 10 major markets. Okay. Let me just hit generate outlook. So reading the macro data and building outlook. So to give me an outlook on 10 major markets, what to expect on 10 major markets. It's taking forever. What's going on? network because it's taking longer than usual. There we go. All right, so GBP USD sell, Euro USD sell, AUD USD sell, USD CAD buy, gold sell, oil buy, sell, BTC USD sell, SPE 500 sell, Nasdaq sell, US 30 sell, and it gives you the reason why you need to be doing that. Now, for GBP, the dollar is strengthening on renewed Middle East tensions and rising September rate hike expectations, which puts pressure on the pound to fall. With no strong UK side catalyst to push back against dollar strength, this pair is likely to drift lower. So with this understanding, I can jump on the charts and then start looking for potential areas to sell GBP from. So far as the markets, this particular cycle, the fundamental and the macro reading for the dollar stays bullish. I'm looking at selling GBP. Look at selling you the euro, the Aussie, dollar card, oil. Says oil is a special case this cycle. Even though a stronger dollar normally pushes oil prices down, the Iran ceasefire collapse and the threat of Hormuz closure have sent prices sharply higher. And that supply shock is overriding the usual DXY correlation. The geopolitical supply disruption is the dominant driver right now, not the dollar. And so you would want to be buying the oil at this particular point in time, not selling it. Ideally, if the dollar is going up, you'd want to be selling the oil, selling US oil. But because of the caveat, what is happening now with respect to the US-Iran war, you'd want to be buying oil. Gold. He says gold is one of the most reliable instruments to move against the dollar. So a strengthening dollar typically pulls gold prices lower. That said, geopolitical risk from the Iran situation can support gold as a safe haven, which can limit how far it falls. So, gold, though it has a sell bias, because of the geopolitical factor, gold can also be supported as a safe haven, so it can limit the drop quality that you'd want to see on gold. Okay. Yep. Bitcoin. It says Bitcoin has a softer and less reliable link to the dollar compared to other instruments, but the risk of environment driven by geopolitical tension and a hawkish Fed generally does not favor speculative assets like crypto. Bitcoin is likely to face downward pressure in this environment, though it can move sharply on its own news and sentiment. Boom. So I'm looking at selling BTC as well. All right. And I already did a video on the side where I was looking at selling BTC. It came from here. This is the reason why I was looking at selling BTC, not because of the technical. I understand them macro and fundamental positioning of the dollar. I can trade every other asset against it. You understand? Yep. So yeah, this is cool stuff. And this is another part that is also really, really cool. Here you can check the DXY chart before analyze. So here I can upload a screenshot of a dollar index chart. I mostly use the weekly time frame because I am a swing trader. So I upload the screenshot of it, let's say the DXY weekly time frame. I upload it over here. Then it tells me whether the technical is in line with the fundamental thesis. Okay, because the macro is currently bullish. So the AI will now check the technical direction with the fundamental direction. Okay, so if the two align, it will tell you that you can go ahead and analyze any other pair you want to analyze against the dollar. You get it? So you can analyze GBP, USD, Euro, dollar, yen, all these pairs. You can analyze them over here. All these things, all these pairs. Select your time frame, then it will give you potential entry, exit, like entry TP and stop losses. So this is another side that of the whole thing that is really, really cool. Really, really cool. All right, guys, let me not bore you much. Like I said, if you want to get access to the macro tracker, just visit www.sogcap.com. We exist to make sure that you understand the macro and fundamentals. We've done the heavy lifting for you when it comes to the US dollar. Yours is to just get the tracker and trade alongside the the DXY bias. Okay, trader. If and I know most of you retail traders out there, you trade dollar influence markets. So this is something that you would need. It's not expensive, less than less than $20 a month, you can have access to it. Yep, have access to the SOG Cap Macro Tracker, and I best believe it's going to redefine your trading process. Okay, stay safe, be blessed.